The spread of the coronavirus pandemic is affecting the whole planet and has left a lot of people struggling financially. If you're facing trouble with your credit card repayments, we've got you covered. Missing a payment can result in paying penalties or more interest and pile you up with even more debt. So we're going to tell you exactly what to do in order to avoid just that. Let's get into it. Number 1. The first thing you need to do is talk to your bank or credit card issuer and ask them what you can do if you're expecting to miss a payment. Chances are they already have measures for such financial hardships. Remember, you're not alone in this. Everyone on the planet is affected and your bank knows that. Governments all over the world are requiring banks to decrease interests and implement easing measures, so make sure you use whatever your bank's got to offer. Number 2. Have an emergency budget. Take a look on your income and spending and try to cut down as much as possible. It shouldn't be too hard since you won't be spending as much on transportation, since we're all advised against unnecessary travel or entertainment, since all bars, restaurants and cinemas have closed their doors. Try to do without any luxuries and settle for the bare minimum until you make your payment. It will be hard, but you'll be glad you did when you pay on time. Number 3. Unsubscribe to all unnecessary things. If you do a lot of online browsing and shopping, chances are your credit card is getting charged tens, maybe hundreds of dollars every month without you even noticing. You just subscribed to some website you used for a couple of weeks and forgot all about it while it still deduces a few bucks from your account every month. Try to remember everything you're paying for online, or ask for a credit card statement and unsubscribe to anything you don't consider necessary. This could be a streaming or music service like Spotify and Netflix, a reading platform like Kindle or Medium, mobile phone services like Ringback Tones, gaming services like PlayStation Now or Xbox Game Pass, cloud storage like Dropbox, or just about anything else you might be paying for online and it's been going under the radar. You might also be paying monthly subscriptions to the gym or for discounts on travel. Consider stopping those too, since we're not really sure when everything's going to open up again. These are some of the most common things, but you have to make a little research yourself and see if you can save a few bucks by unsubscribing to things you can do without for a couple of months. Number 4. Use your federal stimulus check. Governments in many countries like the US, UK, Australia, and many others have already provided many of its citizens with some kind of financial assistance. So if you're one of those people who received a federal stimulus check, and you can afford the necessary things like food and rent, consider using it to pay for your credit card. Think in the long run. Keeping your credit score high will make everything easier for you in the future. Number 5. Negotiate a better deal for your essential services. Now that the market is in such a weak state, everyone's making competitive offers to stay in business. So chances are, if you look around for a better deal for things like your electricity, gas, phone, and internet services, you'll probably find one. Switching your phone or internet service provider can also make you take advantage of a great introductory offer. This can definitely help you save some money each month and use it to pay your credit card. Number 6. Switch your cards. Now, this can be a little tricky, so we're going to try to cover all the details. But you have to talk to your bank and think it through before applying for a new credit card. First of all, you need to make sure that switching cards is going to help you make payments on time. For example, a balance transfer offer can include a much lower rate, and then you can pay it faster so you'd pay less in interest. Also, getting a new card will likely have an introductory offer with it. Some offer no interest for anywhere between 6 and 26 months. Also, if your card has a lot of perks that you wouldn't be using right now, like deals with restaurants and fashion outlets, you might want to switch them for something more practical right now, like a lower interest or cashback that help you save a few bucks. If you have a frequent flyer card, definitely consider switching it. Obviously, you're not to be traveling for a while and no one knows how long this travel ban is going to last. If you're paying a lot in annual fees for things like flight ticket discounts, cheaper car rents in foreign countries, hotel deals you're not going to use anytime soon, think about letting it go. However, make sure you know what's going to happen to your points if you cancel the card and when they're going to expire. Maybe there's something useful you can cash in. But before you jump into this, make sure your application for a new credit card will be accepted. Rejection can really hurt your credit score. Banks need to know that you can afford the monthly repayments, so if you have a steady source of income and you're somewhat doing okay financially, go for it. Balance transfers can help you save more than you realize. Also, before switching, you need to consider tip number 7. Choose a card with lower payment duration. This is for you if you're doing well now and you have some money saved up, but you're worried you're going to run out soon in the future. To make this simple, here's an example. If your original balance is $1,000 and you only pay $35 per month, it's going to take you about 43 months to pay, and you're going to pay about $500 in interest. But if you pay $200 per month, it'll take you only 6 months to pay, and you'll have paid just $30 in interest. So be smart about it. If you can afford bigger monthly payments now, that will save you a lot later. Go for it. Paying a lot in interest is like throwing money down the drain. Number 8. Take a personal loan to pay your due debts. A personal loan can be anywhere from $1,000 to $100,000, and it doesn't need an asset like a car or property. It usually has a lower interest rate than credit cards. So for example, if you have 3 different cards with a $5,000 debt in each and a 20%, 15% and 10% interest rates, it can definitely be a good idea to take a $15,000 personal loan with, for example, 6% interest, which you have more time to pay. You will owe the same amount of money, and this way you'll have just one loan to manage, pay all your due credit card debts to keep your credit score high, and pay much less in interest. Summary. That was it for our 8 things you can do if you're finding difficulty paying your credit card debt. We'll go over them again real quick in order to make sure you didn't miss anything. 1. Talk to your bank and ask if there's any measures for financial hardships. Usually they can give you a longer payment duration without facing a penalty or decrease your interest to make it easier for you to pay. 2. Have an emergency budget. Cut back on as much as you can and do with the bare necessities. The last thing you want is piling up more debt in interest and penalties. 3. Unsubscribe to anything you can do without, like Netflix, Spotify, Kindle, YouTube Premium, and all the likes. 4. Use your federal stimulus package. If you can afford the bare necessities, using the government aid to keep your credit score from dropping can be a good idea. 5. Negotiate a better deal for your essential services like electricity, gas, phone, and internet. 6. Switch your cards. Only do this if you're sure your application will get approved. Balance transfers can offer you a longer duration to pay and a lower interest. And if you're paying annual fees on your card that you're not going to use right now, like the frequent flyer card, consider switching to something more practical. 7. Choose a card with lower payment duration if you can afford higher monthly payments now and want to save interest in the long run. 8. Take a personal loan. It'll leave you with one debt to manage and have you pay much less in interest. If you think you're going to miss a credit card payment, do not take it lightly. You'll probably be charged a late payment fee or more interest, which will only leave you with more debt. Your credit may take a hit, you may receive a default notice, and ultimately you may have to deal with a debt collecting agency. So take the time to study the things we've mentioned and decide what your best option is. Act quickly. Ignoring it will only make things worse. That's it for this episode. We really hope it helps you all out there paying your credit cards. If you found the information here useful, hit that like button, and if you want to support us even more, buy us a coffee from the link in the description. If you'd like to see more videos on financial advice, hit that subscribe button and turn on the notifications for our latest updates. Let us know if there's anything in particular you'd like us to make a video about in the comments section below. I hope you all make it through this crisis with the least amount of losses. Stay safe, and we'll see you in the next video.